Hello and welcome to the second day of the Politico Live Finance Summit. My name is Hannah Brent and I'm a finance reporter at Politico. I just have a couple of housekeeping rules to start. First of all, thank you to our presenting partners Generali and MasterCard for making this event possible. During the sessions, you can ask questions and answer our polls only through the Swapcard platform, the instructions for which you can find on our event website. If you are already on the platform, feel free to chat with fellow attendees and ask questions in the question box to the right of the screen. If you're on a desktop and below the live stream if you are viewing on a mobile. You will also have the opportunity to answer polls at the beginning of some of the panel discussions today. So welcome to the first session. I am very excited to be joined on stage by the EU's Financial Services Commissioner, Mairead McGuinness, and to the Chairman of the Board of Generali, Gabriele Galateri de Genola. So we will be talking through a number of issues, including insurers' role in the economic recovery, retail investment, pandemic insurance, and green finance. So we've got quite a lot to get through. But please do ask questions throughout the panel and also tweet using the hashtag PoliticoFS. So just to start, Mairead, if I could ask you a quick, more topical question. We had some announcements on clearing earlier in the week. There's been a 3-year extension to the equivalence period for UK CCPs. Can you explain, what does success look like for the Commission at the end of that 3-year period? You've been clear equivalence will end, but does that mean that all of the business that the Commission views as over-reliant on UK CCPs at that point will need to be in the EU?
Well, look, financial stability is the core of my role, and it's really, really important. So when Brexit happened, on that day we extended by 1 year, but clearly 1 year is a very short period of time. But to give certainty to the markets, we again announced at the end of last year that we would extend further, but that would be it. So we've granted an additional 3 years, and we're doing this because of Brexit. If London were still part of the European Union or the UK was still a member, this would not arise. We are very over-reliant on UK CCPs. And of course, the business cannot switch overnight, but it can be encouraged to switch over time. So for me, success is financial stability. And whatever happens in relation to the movement has to guarantee financial stability. If you talk to market participants, clearly in the early days, nobody wants to have to move business. But I think from a European Union perspective, we're trying to build capital markets, a CMU, and in that context, we need to have strong financial infrastructure within the European Union, and that's the goal. So we have time now. There's just this week we launched our public consultation, and rather than preempt what might come from that, we're very open to listening to the sector and the industry to hear their views about what encouragements might be required, but also to be very clear about this not being just, if you like, an announcement that is 3 years and more will come. It will not. We're very clear that the work has got to be done in this mandate, with me as Commissioner, to do the heavy lifting, to encourage, to incentivise and to make sure that we have a stronger CCP sector within the European Union. And as I say, we've been clear about this from the very beginning.
The industry has been quite resistant to this move, though. There was some discussions between the Commission and industry over the summer, and we haven't really seen a voluntary move over. So in this consultation, there are some more coercive measures like capital requirements. So are you willing to really force the industry to move this into?
I don't think anyone anticipated that the industry would move in 12 months. But I do think the industry knows that we are serious in our intention and therefore will be more focused and will respond to the public consultation. And clearly we want to make sure that that transition is smooth and effective. So let's wait to see the feedback from the sectors as to what they think would work for them. It will not happen organically. This is very clear, which is why we will need to intervene to encourage more liquidity, to encourage opening accounts with EU CCPs. So I'm very open at this point, but I'm very clear that June 2025 is the end of the equivalence for UK CCPs, and at that point we will have a lot of work done to make sure that we have a strong CCP infrastructure within the European Union. I would regard this almost as part of an overall work stream within the Commission and for Europe, where there are areas where we are vulnerable. where we need to build resilience. And I think if anything showed us vulnerabilities, the pandemic did, and that was on the public health side, also on supply chains. So I think it's part of Europe strengthening internally while being open to the rest of the world, because we still grant equivalences to, as I recall the figures, over 280 equivalences to over 30 jurisdictions. So we're still very open.
This is the only one for the UK, though, right? So I wanted to ask as well, very, very briefly, but we had the Memorandum of Understanding. Last year we talked about that. It seems to be gathering dust in the Commission. Is that going to be resurrected, or? Well,
there's no dust in the Commission. That's the first thing I'd say. The second thing I would say is that, look, we all know the situation in relation to Brexit. It hasn't been an easy moment. So the technical work is done on the memorandum, and there's a political process to be undertaken. I think, secondly, we know that issues are not resolved around the withdrawal agreement and the protocol. My colleague Maroš Šefčovič is working really hard to resolve those issues, and our hope would be that we could see the finalisation of these problems that need to be solved, and that then we can move forward. So I think we have to put everything in its context, including the CCP question, because Brexit, I mean, this audience will know, is a very fragmenting event, a very traumatic event for both Europe and the UK. And indeed, you can see how in the UK there are still huge impacts. And I think that perhaps the consequences of leaving Europe weren't fully understood, but are now being, I feel like they're very visible across a range of sectors. So we have the memorandum, so at least the technical work is done, and let's hope we can complete the process.
But that memorandum then is linked to the broader Brexit issues. Financial services is then tied into the political questions about the future of Brexit.
Well, I think everything is tied into the political atmosphere. I mean, the financial services sector, our priority again was that there would be financial stability after Brexit, and we achieved that. It was quite extraordinary that on day one of Brexit there was no ripple, there was no crisis, because that was not a guarantee. So we managed it very well. And I think we have to be conscious that in a fast-moving world, and maybe we'll talk about digitalisation and new risks, etc., we have to make sure that the work we do is for an EU 27, where in the past London was the very centre of Europe's financial system, but it's not now, it's in a third country. And if I listened recently to the appointment of a new Brexit minister in the UK, and being encouraged, I think, is it 1,000 regulations that they're going to try and get rid of? Who knows where these will land? So again, we have to be conscious of what we're hearing from the UK side and how that might impact us. So we're very open as a strategic player and partner. But I would stress the importance of Europe and the UK having a good relationship. I think this is absolutely essential. If you look at the whole geopolitical sphere, if you look at everything, I mean, digitalisation, globalisation, all of these things, even with the decision of the UK to leave the European Union, we're physically close, we're quite well aligned, and we need to have a good relationship. It's been difficult. I mean, let's be frank. I mean, a divorce is always painful, more for one partner maybe than the other on occasion, and then you have to re-establish relationships.
Okay. Gabriele, within the EU27, we've had the Solvency II reforms. They are aimed at kind of unleashing the firepower of the insurance sector. Do you think they'll work? Are insurers ready to kind of play that role in the economy?
Yeah, hearing Mairead, I have to say that I'm very comforted, because what happened in the recent years has been extraordinary. Europe has become really Europe. I mean, a lot of people in Europe didn't really feel where Europe was, at least in Italy. After the decisions that have been taken, I mean, the most important is on the economic scene, the next generation EU. People feel that Europe is there, and there are a lot of things to be done where Europe can be fundamental. And I'm very pleased to see that these days we talk about objectives which are clear in terms of where Europe is to move, in terms of rebuilding a different environment with better infrastructure, more education, a lot of innovation, green objectives. And in this framework, the insurance sector really can play a huge role. You see, I've been in many different sectors in my professional life, and I always looked at the insurance sector as a rather vague, area where, you had to more or less go there, pay from time to time your tax, and, get the cover for your car or your house or whatever. Now I feel a very different, have a very different view. The insurance sector is managing overall, the European insurance sector, something like 11 trillion euros of assets. It's a huge amount of firepower. And it is directed too little for the time being towards the real needs of the European reality, the economy. We have to invest more money into the real economy in Europe. We need to be part of the effort together with the public, together with the European government to support the needs for investments in the area that I indicated before. Infrastructure, all of us know what is the state of the infrastructure in many countries in Europe, including Italy, needs long-term capital, patient capital. Who can give this capital? Insurers are there. So I think that we are part of the landscape, not only as one of the pieces of the landscape, but one of the actors. We are very expert, for example, in studying big projects, long-term projects, and here we are in the possibility of advising governments. We can be there also in terms of investors that support this huge need of resources. We need, the European Union in terms of regulations and rules that allow us to develop, to deploy this capital. We talk often about the Solvency II question. I think that Commissioner Mairead has done a very good job in moving in that revision so that we can use part of this firepower to support projects that have the characteristics in the area of green, in the area of digital, that need that capital, and so they might deserve some less rules, less capital requirements that would make it more economic for insurers to move in that direction. And this is happening. From what Mairead mentioned now, what I appreciate so much is the clarity of the objectives and the decision to move on in the frame of a stable financial environment. We need, in this very complicated world, a very disturbed world from a geopolitical point of view, from so many inputs and other factors that could move it, Europe has to really appear as a continent in which things are clear, are done, and that takes its place in the worldwide global governance. I always have in mind to imagine that one day between US and China, Europe can really represent a third solid pillar that can help stabilize the global situation. It is so important. And insurance has so many things to say, so many things to do, and believe me, the development also, the way we make insurance through the digitalization and the new instruments we have available, has to make insurance closer to our customers. We always have a statement in purpose saying we want to be lifetime partners of our customers. And the pandemic showed this, because during pandemic, it could have been easy to imagine that things would be disrupted. No, we were able in 2 weeks after the start of the pandemic, 90% of our 70,000 employees were operating in remote for the service of the customers. And the customers never left were never left alone. We were near them, and I'm extremely happy to say that we had no complaints during that period when everyone was locked in his house, and clients had a lot of problems. This is what it means to be insured, to be there when the needs are, not just being there when you collect the premium. This is the real change, and I'm very happy of the potential that the European insurance sector can develop in support of the strategy of the European Union.
We heard yesterday quite a lot about the prospect of rising inflation, though. Does that have a big impact on the insurance sector?
Well, in this scenario, which is rather positive, because I mean let's be clear, talking about growth of GDP by 4 or 5%, at least for an Italian, it's amazing. I mean, we were used to talk about growth of 0.1, 0.2, minus 0.1. Now we talk, well, it's not that much. It's not 4, it's 3.8. To me, this is music. I mean, we talk about 3.8% growth. So inflation is the only worrying thing in this scenario, because we have the resources from Europe, we have customers now, and having the excess savings to be mobilized in the consumer market and so on. The pandemic is moving towards something more like an endemic sanitary situation. But the problem is inflation, and inflation will change the landscape of the framework in which we operate. We will need to be very attentive in this framework to use well the resources that partially and the European Union and partially every country will direct towards things which are absolutely essential. Productivity, competitiveness, these are things in which you have really to invest in terms of innovation, in terms of R&D. For the insurance sector, let's be frank, inflation has an impact, will have an impact. And in my opinion, maybe and hopefully inflation will not be at the levels that we've seen recently, 5%, in the US 7%. We will go down very likely towards the 2-3%, but still it's an inflation very different from what we had during the pandemic, where we were negative or we were close to zero.
Yeah.
Now, for the insurers, inflation means impact on both sides of the balance sheet, assets and liabilities. And let's be frank, inflation, which brings with it higher interest rates, can impact the assets because, of course, part of the assets, like fixed-rate bonds, will reduce their value. But there is also another impact on the liabilities because depending on what kind of liabilities you have, it can be lower or higher. Let's make an example. And it's very different in life business or in non-life business. Life business, basically, some inflation is not negative because you reduce your value on the asset side, but the present value of your liabilities, long-term liabilities, also reduces. So overall, the balance in the life business is positive for the insurers. On non-life, it is very different because on life you always have assets that in an inflationary environment with higher interest rates loses some value, but on the side of claims, the claims, particularly the long-tail claims, have a higher cost. So there you can have a negative impact. It's all the question is between the length of assets and liabilities and the mismatch between the two. So we have to manage those realities with a lot of care in order to maintain the solidity of the insurance sector, which, let's be clear, it is amazing how during that period the entire insurance sector had the Solvency II ratios, which are extremely comfortable and therefore can provide support for all the activity we have to do in favor of our clients.
Okay. You mentioned excessive savings there as well. Mairead, if I could ask you, we have a retail investment strategy kind of coming up. You mentioned, when you became commissioner, you made quite a strong pitch to put consumers at the heart of financial services policy. What can we expect from that? But also, why is it taking so long to come out? Because we're expecting it to be a bit delayed into the second half of the year now.
Well, the first point, we were just chatting earlier, Gabriele and I, and saying that, in the past, the financial sector was in its own space. Now it's front and centre of everything, the transition, the green transition and digital. And therefore we want retail investors to be part of this story as well. But we also want to make sure they're protected. We don't have a culture in Europe of people looking to invest, although I do think we have a younger generation who are using their phones to invest in many different things, some of them quite high risk. So what I'm looking at is making sure that our strategy, and that's why it's important to take time rather than to rush, that it's future focused. Because, and you will know this in terms of digitalization, that the rapid rate of change is incredible, and therefore our strategy has to be future focused. I also stress the need that we talk about financial literacy in the digital era. Because in the past you might have had to go in somewhere and sign. Today you just have to click and you've made a decision that might have dire consequences or good results, depending on how wise the information was. And that is another question of advice and guidance to citizens. So part of my role, and I believe really strongly in this, is to make sure that people are empowered to ask questions, not to understand or know everything, because no one can, but to be empowered to ask if they're sitting down with an advisor. First of all, what am I paying for advice is a key question. There isn't always transparency. And then to make sure that your risk profile and the products you're offered match one with the other. Because the reason people, I suppose, keep money not earning money in deposit accounts, and we saw that during the pandemic, is because they don't see another outlet other than assets. And we're seeing across Europe property price inflation, And we know that that can have consequences. So there's lots of reasons why retail investment is really important. A younger generation who will have many different careers, whose pension needs will be important for them. And indeed, those of us who are at the other end of that scale know how important that is as well. So this conversation, needs to start with a younger generation who will need to plan things for their lifetime in a different way than perhaps the current generation. So the time factor, it will happen by the end of this year, so second half of this year we're looking at it. We did a lot of deep work on the ground to understand and to try and understand across the member states, because in some member states the banks still give all of this advice, in others they won't. In some member states you have to have a certain amount to invest, in others it's not so. So the landscape is very different. And then separately on CMU generally, where we're making incremental progress. I mean, I regard, first of all, your comments on the insurance sector. In my view, it is a sleeping giant. I think the capacity of that sector where we can, mindful of risk, allow capital to be used for these long-term investments, digital and green, is crucial. But two important issues which we should, at least applaud ourselves, and I wasn't responsible, so I can do that now in this role. Solvency II is a gold standard. It's looked at globally as being one of the, the things to follow. And the other point is that we should continue the risk-based approach, and therefore the uncertainties you referenced in your contribution have to be part of managing that risk. So I think let's wait and see what comes out in the autumn in relation to, or second half, I won't say the autumn, in the second half of this year in relation to retail investments. But I really think, and I believe this very strongly, we need to talk about money. We need that people engage with this, whether it's insurance or mortgages or pensions or investment funds. And I hope that when I'm finished my role as Financial Services Commissioner, I will have empowered people to think about the money in their pocket or in their bank account or in their investment. They've worked for it, it should work for them.
A big controversy in that topic, though, is the idea of inducements. What are you paying for advice? Is the Commission leaning one way on how that could go? People have floated a ban. It was included in the consultation. IOPA raised that as well in their recent consultation.
In fact, just this week I had a very good conversation with my colleague, the Finance Minister in the Netherlands, where they have a partial, if you like, a ban on inducements. So we're still looking at that question, and there are pros and cons. It was interesting that we proposed a ban on payment for order flows. Mm-hmm. And it was the reaction of some members of Parliament, my former home, was that they didn't like the idea of a ban. And again, I think the reason for that may be because there is a generation who are using apps, and that this may be part of their system, if you like. So we need to understand fully the reaction to that particular proposal to ban. The US are looking the same direction.
You'd be considering rolling back on that ban then? Or?
No, because our proposal is out, so we're not rolling back at all. But you have to listen to the co-legislators. I was a member of Parliament, so full respect to Parliament and Council in that regard. When you talk about inducements, there's no such thing as a free lunch, and there's no such thing as free advice. What is worrying for me is that there isn't an upfront disclosure. That if you're my advisor and I'm asking for advice, there absolutely has to be upfront disclosure and transparency. So if you offer me a product and you get a cut from that, I need to know so that I make a decision based on full knowledge. How do you achieve that? And I mean, for me, we have to look at how can we improve transparency and disclosure. I'm not ruling out a ban, but I'm not there yet. I think there may be other means. However, in my thinking, as I think out loud now, I think we should go one step first. But keep in mind that if we don't see a change in behaviour of more transparency and disclosure, that it may come that we would have to do something, in the direction of a ban. But we're still in the discussion phase within the services, and there are many different views. I mean, there are some who would say if you go for that, if you like, that hammer blow of a ban, then you might remove the possibility of some people entering the market, that advice wouldn't be offered. There's all sorts of consequences. So let's look at the experience in other places, and then we will make our decision. But what we want, and again, it's about empowerment.
Okay.
People should ask.
Gabriele, if I could just ask you maybe to change the topic slightly because we're running out of time a little bit, but in the pandemic, there were some questions about insurers kind of following through on their policies, and there was a discussion about the idea of pandemic insurance where you would have kind of tiers of insurance, reinsurance, maybe capital markets to protect policyholders in the future. I think this is a topic that Generali has been pushing,
Absolutely.
so what do you think about that?
Yeah, but first I will say one comment on what
Sure.
I said. I don't usually support what the politicians say 100%. Here I support what Mairead was saying 100%. I mean, transparency, simplicity, getting people involved into the financial markets. I mean, this is a must for everyone. I mean, no one can take advantage of situations of confusion or not clarity. If we want to have a capital market union, we need people to believe in that union, to know what they do in that union. And particularly, I'm surprised that among all these changes that are taking place these days in every sector, the question of education, financial literacy, which Mairead is supporting enormously, I support it enormously. You need to have adult people, young people aware of what they do, how they do it, what they do. I mean, I have in my personal experience people of my same level or my same age that are not in the business of finance that ask me questions so elementary that shows that they don't know exactly. And you have people that do maybe different jobs, lower jobs, that ask the same thing. So everyone outside of the financial market don't know exactly where to invest the money, how is the relationship with the agent or with the broker, whatever. We need that to begin. And I have to admit that we have not done enough in the financial area. I'm sorry, maybe I will be criticized by some of my colleagues, but we need to make things simple, clear, transparent. You get something, you pay for something, but that has to be equilibrated. You have to have value for money. I know that the question is, but the insurers, bankers, and so on don't do this and that. I think it has to happen. You cannot just pretend people buying things without knowing if they really get what they pay for. So going to your question, however, yes, you see, my view is that pandemia has just opened the lights on something extremely important. That there are risks which we call systemic risk. Systemic risk means that there are huge risks that affect the entire population, not to say the world. They have a huge dimension. And the concept is that no one, public or private, can confront this kind of risk alone. So it is inevitable that we define ways to confront them, and not only to confront the risk once the risk has taken place, like in the pandemic, but you confront also the ways to avoid the risk. Think, for example, of natural catastrophe. Natural catastrophe, of course, are a systemic risk, but there are so many things that you can do to avoid some natural catastrophe. In that case, you have to work, again, public and private. So what Generali has been come up with proposition is this idea of a pandemic fund. Pandemic fund means to have a capacity to answer to the requirements of the market, particularly this business interruption question that has affected so many people around the world. And a lot of them were not covered by insurance. But to cover them by insurance, there are little statistics to allow the insurance to do alone their job. So if you build a fund in which insurers, for the first, know the business of insuring, do their part, reinsurers add their activity. Investors, financial investors that participate to the financial markets can also step in. And then you have also national or supranational governments.
And the EU at the top as well?
And the EU, exactly, at the end. But everyone has to do part of that activity. I think the future in a global world cannot be mastered only by one actor, be it the government or there is no such thing as a world government that can do this. And it would not be fair, because the capacity to identify the risk, how to manage the risk, is a technical profession. You cannot expect the governments to have all these capacities. The insurers are there to evaluate the projects, to see how you invest the money and you follow that money during the deployment, how you assist people that are affected. These are expertise that can be used. And we provide, and we are ready to provide to governments this capacity of advising, and this capacity, as I said initially, to stepping in with our own money in order to be part of the game. But the game is so big that it would be unrealistic to think that the insurer alone can give that response.
Is that something that's being considered at all at EU level, Mairead?
Look, I think the pandemic has raised lots of questions around insurance and, as you say, is there a role for public-private? It's too early to give definitive answers. I think we need to answer all of those questions you've raised. I think when you look at what happened during the pandemic, I think there was the issue of business interruption. In some places, policyholders had to go to court to actually clarify the situation. So I think that needs to be dealt with. The second issue generally, but in the pandemic context and in the climate context, we now know that there are many places and businesses and citizens who can't get insurance. We need the insurance sector to look at nature-based solutions, to talk the environmental talk, and that's happening already. And on this big question of how do you accommodate such a massive event like a pandemic and who pays, we're talking with IOPA, we're going to talk to the industry, but there is nothing on paper at the moment because it is an enormous question. And I think you've raised that, Gabriele, when you say no one can deal with this. But we certainly would think we need to be better prepared. And I think
a potentially enormous cost maybe as well for the EU.
Well, I mean, there's always a cost involved here, and it is not something that you would see happening overnight, but it's important to have the conversation. So we have no fixed view on this. We have been having conversations since the pandemic, watching what's happening on the ground, and IOPA will give us some guidance as well on this. But I've been very interested at the lead you've shown in relation to this area. My last comment in relation to insurance and risk and climate and environment, you know, we're in a world now where things are not in their own little boxes anymore. And that's as it should be, because business was impacting on environment and climate, and it's now much more, it's a much more complex situation for managers, for those assessing risks, and we need to move at a very fast pace to deal with all of those challenges around climate and biodiversity. We need money, and therefore coming back to insurers and their role, making sure that there's no risky actions, but the money that's in the insurance sector, as I say, a sleeping giant, can really support us in our transition, both green and digital.
Okay, we're running out of time, but very, very briefly on the green side of things. We've had the taxonomy recently. Mairead, you referred to it as a voluntary tool, and we've had the big discussion about nuclear and gas. Mm-hmm. But do you think that the fact there's been a discussion, regardless of the merits, undermines the taxonomy as that kind of standard in the market? Is there a risk that it no longer serves that kind of benchmarking process?
I think it's quite the opposite. I mean, I think that if you look at what we did, very tough debates and very important decisions, what we have done is included two energy sources, nuclear and gas, in a very constrained way. And in my view, isn't it better for the public to see that those who in the private sector might want to invest would invest with constraints, because they can invest outside of the taxonomy rules? I think secondly, we're dealing with a reality, a painful reality, that we need to accelerate the transition to low carbon. The issue of nuclear is not a carbon problem at all. We had to look at the do no significant harm and write in criteria on that score. Gas is a fossil fuel, and we don't want gas. We want renewables. I mean, this is the core of our policy. Mm-hmm. But for some member states, in certain circumstances, they need gas to transition. And I listened to an interview from the Deputy Director General of the United Nations, and where she dealt with this issue about transition, and how it's really important that if you affect economies, you impact people. So the work we're doing is not straightforward, but it does require urgency and it requires pragmatism. And I hope that people will view what we did on the complementary delegated act in that sphere: pragmatic, responsible, time-limited, looking at all the issues. You know, the first delegated act, which people forget about, but I don't, last year, was not an easy process either. There were many views and conflicting ones around different sectors. But look at the achievement, Parliament, Council and Commission. We now cover 80% of the highest emitting sectors, a huge swathe of economic activity, and it's now in place since January the 1st. So in my view, debate is the best thing you could have, because what has happened since we just had this discussion about energy and energy prices and all that goes with it, in all our member states, I think there's a much more grounded discussion about our vulnerabilities, our energy mix, the challenge of change, and I think that's healthy. I mean, in my view, that's the good thing about Europe. We debate, we discuss, we can argue, but we do it respectfully. And I am now in the hands of the co-legislators in relation to this complementary delegated act. And I will talk to all of the colleagues, and I look forward to those discussions.
But just to be clear then, for the financial sector, you hope the taxonomy will still serve as that standard, even with this?
The taxonomy is that standard already for a significant proportion of activity. And I believe its clarity around these two energy sources is equal to the first one. We now have sectors coming to us saying, we want you to consider us in the taxonomy. So our work is not complete. You know, the idea of a taxonomy, I'm not thrilled about the name, frankly, but the idea that you, and this is a first, this is groundbreaking work and not easy, that you define in a very granular way what accounts for sustainable economic activity. It's twofold. One, it's a guide for investors, but it's a management tool for businesses. Perhaps our conversation in the past was too binary, green or not. The truth is, the biggest benefit and return will come from investing in those that are not green, but are on that path. And we need to talk about transition. And I've said we need to talk about finance, and we need to talk about financing the transition. And that, to me, that means we will achieve where we need to be. So for all of the discussion and all of the debate, it's been really, really healthy. Europe is leading on this taxonomy, but we're doing it with transparency and disclosures, and we have absolutely increased those requirements around the nuclear and the gas question.
Okay, Gabriele, if I could give you the last word, how does the taxonomy and green finance in general affect Generali? Is it?
Well, we're very committed in that direction. I mean, green is really part now of our strategy. Our new plan, 22-24, is built on this concept. ESG in general, not only green, is part of the products and the processes. I fully agree with what Mairead said. I would just add one little word to transition, just transition. We always believed that you cannot go from the green, from where we are to green, just, you know, with a jump in nothing. I mean, we need to go it through a just transition, which means that there are instruments that we have to use. Probably even gas and nuclear for some time will be necessary in some cases. I mean, we cannot just dream. We have in front of us a real problem that has to be confronted. We see it every day, and we need to go there. And there is no such a thing as a free lunch, as you said before. So we need to, you know, pay maybe some price slightly during that transition, but it has to happen. I was myself, you know, in the past when we could travel more in Poland, in Czechia, where there are huge problems moving from the carbon to green. And how can you say? You cannot just close something, you know, suddenly and then wait for something to happen. You have to help these companies to move as long as they have programs, they are serious in making the changes so that you can really see a green world in a realistic way in front of you.
Okay. All right. Well, thank you both very much for taking the time. It's been a great discussion and interesting to end on the point about transition. But if I could ask the audience to remain seated, we'll begin in a couple of minutes with the next session on sustainable finance. Is Europe ambitious enough? Possibly continuing that a little bit further.
I should please drop.
Thank you very much. Thank you to both of you.